Guys, last week in my S&P 500 technical analysis, I have mentioned this thing very clearly, that because now the Feds have raised the interest rates, this means that the full effects of that rate hike will be visible very soon. That is why you are advised to collect what? To collect the puts and the shorts whenever you see that there is a bullish retrace or a bullish movement, because whenever the S&P 500, whenever it try to move up, it will see struggle, and it is highly likely it is expected to fail. Again and again, whenever it moves up, it will come down. Whenever it moves up, it will come down. That is why you are advised to start collecting the puts and the shorts for the longer term. Now guys, I can understand that just like others, you are also confused that what is happening in the US stock market. What is happening in the S&P 500? It looks like it is moving up, but it fails. And looks like it is coming down, but again, we see a reversal. So it is neither moving up nor coming down. Then what is happening? What is the true picture? What is the true picture? What is the true movement? And that is what I'm going to tell you in this S&P 500 technical analysis, that what is the true movement. Anyways guys, if you remember that last week I have mentioned this thing very clearly, that 4155 is the very strong resistance. This means that on Monday the S&P 500 will try to move up, but its upward movement will be restricted to 4155. It can move up only and only if it breaches, closes and sustains our 4155. But if it fails on Monday, then on Tuesday this movement. Now the last and the final chance the S&P 500 will get, it will be only and only Wednesday. Why Wednesday? Because the CPI data will be published on Wednesday, and only if the CPI data comes favorable to the US stock market, then only we can see an upward movement, and we can expect S&P 500 to breach and to sustain our 4155. But if it fails to clear the 4155, then down and down. So if you see that I have divided the week in two parts, Monday and Tuesday, these 2 days, then Wednesday, Thursday, Friday, these 3 days. So Monday and Tuesday, the movement was there. I have defined Wednesday, Thursday and Friday. It will be defined by the CPI data. That's it. And if you look into these, the daily updates of the S&P 500 that I have given to my community members, then each and every day I have defined very specifically, very clearly that see, this is happening. This is what we are expecting, and this is how the S&P 500 is going to move. So overall, the movement of the S&P 500 in the previous week as per our expectations, particularly through these the daily updates from Monday through Friday that I have given to my community members. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community for the daily updates and the analysis of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis for the week of May 15th, that is from May 15th, which is Monday, through May 19th, that is Friday. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means the big picture, that what is happening and what is going to happen, at least like for 1 quarter or so. Okay, so that is the weekly chart. The big picture means the trend setter. So we will come to know that what is the current trend of the S&P 500, and not just for the S&P 500, but also for that what is the current trend for the Dow Jones and also for the Nasdaq, and in turn for the entire US stock market. Then the second point of the agenda is the CPI, inflation, PPI, recession, Federal Reserve. So the CPI data that we have seen, the CPI data has indicated that the inflation is holding. So because the inflation is holding, so there are good chances that the inflation can give a bullish reversal. So I'm going to discuss, okay, this the CPI, the inflation, then the PPI, the producer price index. Okay, again, this is an indicator, okay, or this is simply fueling, okay, this is the inflation. Then the recession, that whether the recession is still in the picture or not. Okay, but obviously it is still in the picture. Okay, and what will be the impact of the recent CPI PPI data, okay, on the inflation. And now after that, the CPI data, the inflation data, okay, it has been published. So what the Federal Reserve is most likely going to do, or what the Wall Street is now anticipating, whether there will be a rate hike or not. Now the third point of the agenda of this S&P 500 technical analysis is that it is S&P 500 support and resistance level. So I will give you the support and resistance levels for the S&P 500. For example, last week I mentioned 4155, then I mentioned 4127, then I mentioned 4110, then 4099, then 4091, etc., etc., then 41995, etc. Okay. So similarly, I will give you the support and resistance levels for the S&P 500 for the coming week so that you can plan your trades accordingly. Then the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. Now, the first point of the agenda was the weekly chart, the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture. And now this is the S&P 500 technical analysis on the daily chart. Daily chart means the short picture, the short term picture. What is happening? What is going to happen for like 1 week, 2 weeks, or maximum, okay, like a month. That's it. So I will tell you through the technical analysis of the S&P 500. Okay, here in this point. Now, the fifth and the final point is the probable movement of the S&P 500 from May 15th, which is Monday, to May 19th, that is Friday. So last week I mentioned that first it will move up. If it fails, then it will remain here. If it clears, then it will move up. And then on Wednesday, we will come to know again a success means upward movement, a failure means down, down. Okay. So I will discuss that in the fifth point of the agenda of this S&P 500 technical analysis. And guys, one more thing. There is a very, very important thing, very interesting thing that has happened in Dow futures. Not in the Dow Jones, but in the futures of the Dow Jones. So that I will discuss in this, the S&P 500 technical analysis. So guys, for your information that each and every section is related to the other section. So you are advised to watch this, the entire technical analysis, because this contains a tons of information, a lot of information, valuable information that you might not get or you might not find anywhere else. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community for the daily analysis, the daily updates of the S&P 500 from Monday through Friday, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 technical analysis, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So this is the weekly chart. Let me write it down. Weekly chart. W as in weekly. Okay. Now weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? Now on this, the weekly chart, the very first thing that we are going to discuss is the candle itself. Now what is the most important thing about this, the candle? If you look into the high of the candle, it was the boundary of the almost the boundary of the Ichimoku cloud. Ichimoku cloud is a technical indicator. Okay. And the boundary of the Ichimoku cloud is 4155. And it is not just the Ichimoku cloud, the 4155, but also this is the 50% of the Fibonacci retracement level on the monthly and on the quarterly chart. That is the 50% retracement, Fibonacci retracement level. Okay. That is why the 4155 is very valuable, as well as it is very strong resistance as well as very strong support. Okay. As of now, it is seen as very strong resistance. Now, if you look into the candle, it's the candle on the weekly chart of S&P 500. It's a red candle. Okay. Secondly, it's not a doji candle. It looks like a spindle, but it's not a spindle again. Okay. This means that we are going to count and we are going to see it as a bearish candle. That's it. Now, not just the bearish candle, but also a candle that has failed to clear the 4155. And also, there are these the two weekly candles. There are these the two weekly candles that have failed to clear the 4155. And this was the same thing that I mentioned here in my pre-market update for my community members yesterday before the open of the US stock market and the S&P 500. That see, today means Friday is the weekly expiry and the weekly candle will form. And on this day, it's very important for the S&P 500 to clear and close above 4155 if it wants to hold and hold bullish. Because if it fails, means if the S&P 500 fails, to clear the 4155, then this will be the second consecutive failure, and that can even lead to a fall on Monday and on subsequent days, right? Two consecutive candles or two consecutive failures. So S&P 500 for two consecutive weeks failed to clear and close above the 4155. What it means? Technically, this means this kind of movement, the bearish movement, right? So last time we have seen that it failed and it closed just below the boundary of the Ichimoku cloud in the bearish side, and what has happened the next week? A very heavy fall, right? But this time, not exactly a very heavy fall. Yes, a very heavy fall can come, but at first a fall is what we are anticipating, and the S&P 500 has closed back inside the Ichimoku cloud. This means now it has very strong probability to come down to at least to around like 3972. And what is 3972? In my previous S&P 500 technical analysis, I mentioned that the 3972 was the level from where the S&P 500 was manipulated. And as per my research, I have concluded that whenever the S&P 500 is manipulated, then after some time it comes back to the level from where it was manipulated. In this case, this is 3972. Okay. So now this is clear. Now let's see what the technical indicators are saying. Now guys, let's see what the technical indicators are saying on the weekly chart of the S&P 500. Now at first, this is the Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 is trading in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Band, right? Now, then comes the moving averages. A clear fan out in the moving averages, and also the closing of the S&P 500 is above the moving averages. This means that the S&P 500 is bullish through the moving averages. Moving averages means EMA, exponential moving average. Then comes the Ichimoku cloud. Because the S&P 500 has closed inside the Ichimoku cloud, this means that the S&P 500 is neutral through the Ichimoku cloud. Now let's see what other technical indicators are saying. Now MACD. MACD is moving average convergence divergence. So far, MACD is more than the signal. This means that the S&P 500 is bullish through the MACD, right? Now comes the stochastic RSI. Now if you remember that last week the K channel and D channel both were above 90. That is why we were counting them in this bullish side. But now if you notice that on the weekly chart of the S&P 500, in this the stochastic RSI, the K channel is less than the D channel, and now K is less than 90. This means that now the S&P 500 is finally bearish through the stochastic RSI. But the most important part is that the MACD is bullish, stochastic RSI is bearish. Now they are simply opposite to each other. Both MACD and the stochastic RSI are not giving a definitive or a defined direction to the S&P 500. This means that both of these are cancelling. Stochastic RSI and the MACD are cancelling their respective effects, right? Now when we look into some of the technical indicators, everything is fine, everything is good for the S&P 500. So now the conclusion here is that the S&P 500 is bullish through the Bollinger Bands, S&P 500 is bullish through the moving averages, S&P 500 is neutral through the Ichimoku cloud because the S&P 500 has closed inside the Ichimoku cloud, and the S&P 500 is bullish through the MACD, S&P 500 is bearish through the stochastic RSI. What does that mean? This means that the MACD and the stochastic RSI, they are cancelling the effect of each other. So we can clearly, or we can simply say or count that both of these are giving a neutral impact to the S&P 500. Now the Ichimoku cloud is also neutral, and the Bollinger Band and the moving averages, they are giving the positive impact. So overall now overall we are going to say that the S&P 500 is 50-50. Okay, 50% bullish, 50% bearish. Overall it is neutral, and now the S&P 500 is looking for a direction. Now when I say direction, you might think that either it will go bullish, okay, or it will go bearish. Yes, but there is a third direction. What is the third direction? A sideways movement. A sideways movement. That is the most important part, and that is something we are going to discuss in detail here, because now looks like that the sideways movement, that we also call as the consolidation. So now looks like that the S&P 500 is moving into or has entered into the consolidation. That is the third direction. So for now this thing is clear, 50-50, and the S&P 500 is neutral, and the S&P 500 is looking for a direction. And not just the S&P 500, but also we can say that the US stock market is looking for a direction, okay, either a bullish or bearish or consolidation, the sideways. So guys, once again, if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you want to join my Patreon community in order to get the daily analysis, the daily updates of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now guys, let's discuss the second point of the agenda of this S&P 500 technical analysis. And the second point of the agenda is the CPI, the PPI, inflation, recession, Federal Reserve, etc. Okay. So I'm going to begin with the CPI data. This is the chart, okay, and the ticker is USIRYY. Okay, the inflation, the CPI, and this is the headline inflation. Okay, we have the headline inflation and we have the core inflation. So this is the headline inflation, right? So you need to understand that the target inflation rate is 2%. So it is the job of the Federal Reserve to make sure that the inflation remains below 2% no matter what. Okay, below 2%. What is the current inflation rate? It is the headline inflation. Okay, generally they talk about the core inflation, but even if we look into the headline inflation, it is 4.9%. Because of this, the back-to-back rate hikes, we have seen that the inflation has cooled down. Now, the problem is that the inflation, this is the headline inflation. Last month, the headline inflation, it was 5%. This month, the headline inflation is 4.9%. Only a minute difference. Just a minute difference from 5% to 4.9%. That is not the actual problem. The actual problem, if we look through the technicals, so the actual problem is that for last 5 to 7 months, the inflation is trading at the bottom, at the technical bottom. Obviously, this is not the bottom 4.9, but the inflation is trading at the technical bottom. And anytime it can give a reversal or a big reversal, a huge reversal, inflation, a huge reversal, right? And that reversal will not work for the US stock market, will not work for the S&P 500, neither for Dow Jones nor for the Nasdaq. It is simply not going to work, because a reversal in the inflation means whatever the Feds have done so far, okay, the back-to-back rate hikes, this means that now that is not working, and Feds will be forced to increase the rate hikes further, like 25, 50 BPS or so, in order to make sure that there comes no technical reversal, rather it comes down. However, a technical reversal is due in inflation. That is there, it is due in inflation, right? Now this was the headline inflation. Now the most important part that the Feds consider is the core inflation. It is the core inflation. Headline inflation includes the food and the energy prices, food and the energy prices. Core inflation excludes the food and the energy prices. Now in my pre-market update on May 10th to my community members, I mentioned that now the much anticipated CPI data is now published, and the headline inflation surprisingly came down to 4.9% from 5% minute change. But there was a little change in the core inflation to 5.5%. And what was the core inflation last month? It was 5.6%. And how much this was the core inflation, okay, for this month? 5.5. So if you see that the last month headline inflation, it dropped to 5% from what level? From 6%. It dropped from 6% to 5%. Okay. And last month, the core inflation, I think it moved up from 5.5% to 5.6%. However, this time, there is a minute decline 0.1% decline in the core inflation, 0.1% decline in the headline inflation. Both of these, the core inflation and the headline inflation, are clearly saying that the inflation is holding. Inflation is holding, and that is the problem. So this indicates that the inflation has come to the junction wherein it is very well and strongly holding, and now possibly next month we will see a bullish reversal in the headline inflation as well as in the core inflation, right? So this is the most important part, and you must be very well aware of the fact that next month when the CPI data will be published, so even if we forget about all of these, the theories and everything, then also the headline inflation is trading for 5 or 7 straight months at the absolute bottom, and at some point of time it has to give a reversal. Technically it must come, and now looks like that possibly next month we will see a bullish reversal in the headline inflation as well as in the core inflation. Now, because the inflation data is supporting a hold at the current levels in the inflation, this means the Feds, the Federal Reserve, or the FOMC, Federal Open Market Committee members, they are not going to be happy, or they are not going to be much happy. And this means that now the chances of seeing another rate hike next month are going to increase, and possibly we will see another rate hike next month. What you have seen recently, that all of these, the news channels and everyone was saying that now the Feds are going to pause the interest rates, right? But now because of this the inflation data, that is saying that the inflation is holding and possibly a bullish reversal, right? This means that if the Feds are also aware of this, and I believe they are okay, so they know that there will be a time when there will come a bullish reversal in the inflation, so they cannot pause the rate hikes, or they cannot simply go for the rate cuts. Anyways, so now you have seen it by yourself, technicals, everything 0.1%. okay, now you know what is the clear picture, right? This means that now the stock market, the US stock market, has a little room to move up. Little room means maximum up to 4155 or maximum to 4185 or 95, that's it, okay? But there is definitely nothing to be happy about or to celebrate anything. Now, any fake celebrations will be seen as blessings in disguise, because through the fake celebrations the US stock market and the S&P 500 will move up, and you can collect the shorts and the puts if you are trading in the long term. So even though there were the fake celebrations, okay, but this was blessing in disguise, that you can now collect the shorts and the puts, and then eventually it will fall. So in this, the pre-market update that I published before the open of the US stock market on May 10, my community members were very well aware of the trap, the fact and everything, that there is no need to celebrate. Use any bullish retrace as an opportunity to go bearish, particularly for the long term, right? And anything that moves up is fake. So for those who want to know that what will be the benefit of joining my Patreon community, so the benefit is that you will come to know what is happening on the daily basis, what is the movement, how the S&P 500 and the entire market is going to move, whether it will move up, whether it will come down. So you will be very well prepared in advance before, and you know the things before the things happen. Anyways, we were talking about the inflation. So we have discussed the CPI data, right? Now let's see the PPI data. Okay. So PPI data is supportive to the CPI data. Now, what we have seen in the PPI data, so PPI data, PPI means Producer Price Index. And what is this, the Producer Price Index, PPI? Okay, let me first explain PPI. Producer Price Index means how much money producers are getting for their produce. If you look into this, the PPI data, so the US PPI, the Producer Price Index, rose by plus 0.2% against the previous month, which was a significant decline to minus 0.5%. So this month it increased by 0.2%. And what was the previous, and what was the PPI in the previous month? It was minus 0.5%. and this time it was a positive, the move, okay, this the increase in the producer price index. This means that the producers are getting more for their produce. Whatever they are producing or whatever they are manufacturing, whatever they are selling, they are getting more money, they are making more money. This means that the producers are getting or making a little more money on what they are selling. This means consumers are paying a little more. This supports the inflation. So I hope now you understand the role of PPI, that how the PPI is supporting the CPI, okay, and this the inflation, right? Now comes the recession part. Yes, there is no change in the recession part. I have discussed, okay, in each and every S&P 500 technical analysis, and last week in the S&P 500 technical analysis, I have shown you the FOMC, the Federal Open Market Committee minutes of the meeting, okay, this the note. And in the note clearly I've shown you that, see, this is where it is written by the Federal Open Market Committee members that a recession is indeed, the recession is inevitable, and this will be there for 2 years, and everything will be back to the normal, okay, in 2025. And also, if you see that the headline inflation is 4.9%, the headline inflation will be back to 2% in 2025, okay, from 5%, from 4.9% to 2%, it will take 2 years. This is what they have mentioned, the Federal Reserve themselves, okay, not me. So overall, the conclusion is that in the next the meeting, okay, in the next FOMC meeting next month, okay, in the month of June, Feds, now the chances have increased that the Feds are further going to raise the interest rates. Now, recently the Feds have raised the interest rates by 25 BPS. And I have defined that very clearly, that the impact of the rate hike, okay, the increase in the rate hike, okay, how it is going to impact the banks, okay, heavily. And recently we have seen that there was a regional bank, okay, PAC West, I guess, Pacific West Bank, okay, so it went down, okay, the next day when the Feds have raised the interest rates. But what we are looking for, a big bank, we are looking for a big bank, okay, just like Silicon Valley Bank or Signature Bank or First Republic Bank or Credit Suisse, okay, these kind of banks. And once that happens, then the entire stock market has no reasons, absolutely no reasons to move up or to move up heavily or to move up at all, right? So stay tuned and make sure that you have subscribed to my channel, or you can join my Patreon community so that you are aware of the things each and every day, what is happening even before the things happen. And I have given the link of the Patreon community in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the support and resistance levels for the S&P 500 for the coming week. Okay. Now the support and resistance levels in the bull side, okay, we have at max 4227, 4227. However, as of now, technically it is not seen, or technically it is not supported, okay, any movement up to 4227, that is technically not supported, okay. But because now we have entered into the phase, which you can also say a phase just before the recession, okay, just before the recession begins. So most of the times historically we have seen that just before the recession begins, an unexpected bullish movement comes that is neither supported by any technical indicator, nor the technical analysis, nor through any logic. An illogical bullish movement comes, okay. However, technically 4227 is not possible, and technically it is not there in the picture, right? Now, what is there in the picture, or what can be there in the picture, is 4185, 4195, this little zone. This is extremely heavy zone, 4185 and 4195, okay. Now, in order to move towards 4227, at first the S&P 500 has to face 4185. Just like last time, it tried to move up, but it failed. And I mentioned this very, very clearly to my community member that, see, it is expected to fail, and this is very, very strong resistance, very good chances it is expected to fail. But if it moves up, but if it is able to clear, then it will move towards 4195, and a sustained movement above 4195 can only push the S&P 500 towards 4227. Else there are very good chances it is going to fail. The S&P 500 is going to fail from this level, and then there will be this movement, and it was. Okay. So now 4185, 4195. Okay, but the near and the very strong resistance that we have for now, the S&P 500 is struggling to breach, is 4155. In actual, okay, this is a small zone from 4150, from 4150 to 4160. Okay, this is a very small zone, a very small and very heavy resistance zone for the S&P 500. Okay, so 4155. Until and unless S&P 500 clears, holds, closes and sustains above 4155, it is not expected to move this way. Intraday it can try, okay, that is possible, but otherwise, okay, a sustained movement, that is not possible until and unless S&P 500 clears 4155 and sustains above 4155. But because recently we have seen two consecutive failures on the weekly chart of the S&P 500, thus it has further diminished or reduced the chances of seeing, okay, a breach and a sustained movement above 4155. Yes, it can hit or it can try to hit 4155, that's not a big deal, but a sustained movement above 4155 is the demand of the bullish, okay, or the bullishness. Okay, now comes the support. As of now, 4127 is going to act as very good support, okay, as it has earlier. Okay, support as well as resistance. 4127, very good. Then we have 4110, and if you remember that for last many days, many weeks, okay, I mentioned this thing, that as long as S&P 500 is holding above 4110, this means that S&P 500 can hold bullish. If not bullish, then S&P 500 can simply hold its ground as long as it is holding above 4110. As simple as that, right? Now, so 4110 is very good and very strong support. Now comes 4091. Again, a very good support. Very good support, 4091. Okay, 4065 is the next support. Now comes 4035. This is the standard support. 4035 is the standard support. Okay, 4065 is there. It is an intermediate support, but again a good support. Okay, and then it was 4091. Okay, so now the 4035. This the 4035 is basically a zone from 4025 through 4045 plus minus 10. Okay, this is actually a zone from 4025 through 4045. That is the zone. This means that any kind of fall is expected to find support or very good support at the zone of 4035. Secondly, if you look into the 200-day EMA, 200-day exponential moving average, it is also reaching to or almost it has almost reached to the zone of 4035. This means that first of all, this my calculated support level. Secondly, the 200-day EMA, these two are going to provide very heavy, very strong support to the S&P 500. And even if the S&P 500 breaches the zone of 4035 within a single candle, then also in a day or two it will come back to respect the 4035, and then only it is permitted to go down, right? So this is the magic of 4035 zone. Then from the zone of 4035 itself up to 4000, we have this, the Ichimoku cloud. So Ichimoku cloud is going to provide the necessary support, okay, or the very good support. Once the S&P 500 breaches the Ichimoku cloud and closes below the Ichimoku cloud, this side means the bear side, then it is going to see for the next support is 3990. 3990. However, the standard support this time will be 3972. What is the 3972? This was the level from which the market manipulators, the stock market manipulators, they have manipulated the S&P 500. This was the level. So as per my research and as per my theory, whenever the S&P 500 or the Dow Jones are manipulated, then sooner or later the S&P 500 and the Dow Jones comes back to the levels from where these indices, the respective indices, okay, they were manipulated. Recently what we have seen, that the S&P 500 was manipulated from this level. This was 4056, right? It was manipulated, and I mentioned this thing very clearly, and with this the 100% accuracy, that see, now the S&P 500 will come back to 4056 before it can plan to move this way or that way. But at first it will come to respect the previous level from where it was manipulated. Similarly, now we have 3972 in the picture, from because last time S&P 500 was manipulated from this point. Okay, then comes the next support at 3960. Okay, so for the coming week, let's keep the support and resistance levels from 4227 to 3960. Okay, why up to 3960? Because there are two consecutive rejections on the weekly chart from 4155 level. That itself is a big thing, very big thing. Okay, and secondly, we have seen that the S&P 500, when it tried to move up again and again, the S&P 500 has failed, and again the S&P 500 came down. Okay, this means that the S&P 500 is struggling to move up, that the S&P 500 is struggling to go bullish, right? That is why I need to keep the 3960 up to 3960 open, because 3972 is also in the picture, right? So guys, I have this important information to share with you, that if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. And let me tell you the process, that how you can join my Patreon community. So I have given the link in the description of the video and also in the comment section. And when you visit that link, then you will see that this is the page. Okay. Now in this page, you will see that there are the membership levels. So the first one is the daily S&P 500 updates for non-US Canada residents. So when you go for this, then you will get the daily S&P 500 analysis, daily S&P 500 updates and the probable movement from Monday through Friday, right? And this one is the daily S&P 500 updates for US and Canada residents only. So you will get the daily S&P 500 analysis, daily S&P 500 updates, and the daily S&P 500 probable movement from Monday through Friday. Now it's not just the daily updates and analysis of the S&P 500 that I give to my members, but also the stock market opportunities, the US stock market opportunities in the premium stocks. So I give minimum 5 to 10 every week. So if you opt for the market opportunities and daily updates, which means that you will get the daily S&P 500 analysis, daily S&P 500 updates and the probable movement of the S&P 500 from Monday through Friday, as well as you will get the US stock market opportunities in the premium stocks, minimum 5 to 10 every week and up to 50 every month. So this is open for all, irrespective of your geographical location or irrespective of your country. And once you join my community, then you will get all of these updates, daily updates from Monday through Friday, each and everything. Now, if you see that many members have joined my Patreon community and they are getting the updates for last many weeks, for last many months. So guys, whenever you want to join my Patreon community, you are welcome, and you can visit the links that I provided in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart. Daily chart means that the one candle represents one day, not 1 hour or 1 week. One candle means one day. Okay. Now, at first, I am going to analyze the candle itself. If you look into the candle, it's a simple bearish candle. There is no defined shape of the candle. What it means? This simply means that the candle is bringing the bearishness in the US stock market, in the S&P 500. That's it, and nothing else, right? Now, this was the candle. Now let's see what the other, the technical indicators are saying on the daily chart of the S&P 500. Now first comes the Bollinger Bands. This is the lower band of the Bollinger Band, and this is the median of the Bollinger Band. Because the S&P 500 has closed in between the lower band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands. Clear? Now comes the moving averages. Moving averages, still there is a clear fan out in the moving averages. Okay, however, there was this the recently, okay, we have seen this a crossover in the moving averages. Okay, the early moving averages, early indicator. Okay, but still these are moving averages, the EMA, exponential moving averages, they are aligned bearish, sorry, they are aligned bullish. Okay, and because the S&P 500 was able to close above these are moving averages, this means that the S&P 500 is bullish through the EMA. S&P 500 is bullish through the exponential moving average, right? Now comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud. Now let's see what other technical indicators are saying. First comes the MACD. MACD is less than the signal. This simply means that the S&P 500 is bearish through the MACD. Simple. Then comes the stochastic RSI. Stochastic RSI, if you notice that the K channel is marginally more than the D channel, marginally, right? This means that the S&P 500 is bullish through the stochastic RSI, but this is marginal. This means that if there comes a small candle, a thin candle, or a red candle of any kind, then also there will be this the K channel, then the K channel will become less than the D channel, and then the K will be less than the D. MACD is less than the signal. Both the stochastic RSI and the MACD will be aligned bearish, and then that will bring the bearishness, right? So if you are my Patreon community member, then once this thing happens, okay, I'm not sure whether this is going to happen on Monday itself, maybe on Tuesday, Monday, Tuesday, Wednesday, but when this happens, then be ready to see the bearish movement and the bearishness. Okay, and all of the technical indicators are fine. Okay, and everything is good. So this means that the S&P 500 is bearish through the Bollinger Bands. S&P 500 is bullish through the moving averages. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is clearly bearish through the MACD. MACD means moving average convergence divergence. S&P 500 is marginally bullish through the stochastic RSI that can change into bearish. Okay, so all we need a thin candle or a red candle or a thin green candle. Okay, that's it. Now this clearly means that again the same kind of situation here. S&P 500 is neutral on the daily chart, 50-50. This is the situation here on the daily chart of the S&P 500, right? This means that the S&P 500 is looking for the direction, whether this way or this way or this way, right? So guys, once again, if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you want to join my Patreon community for the daily updates and daily analysis of the S&P 500, then I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fifth and the last point of the S&P 500 technical analysis. And the last point of this S&P 500 technical analysis is the probable movement of the S&P 500 for the next week, that is from May 15th, which is Monday, through May 19th, that is Friday. So before I give you the probable movement of the S&P 500, you must understand and you must consider a few things here. Okay, very important things. Number one, the very important thing is that 2 consecutive failures on the weekly chart of the S&P 500. We have seen that the S&P 500 on the weekly chart two consecutive times. Okay, last week and last to last week we have seen that it has closed, it failed to clear the Chimoku cloud, and the point 4155, that was the mark. Okay, so there are two consecutive failures, and this is simply bringing bearishness, heavy bearishness in the entire US stock market and in all of the indices, right? Number two comes into the picture through the Dow Jones futures. Through the Dow Jones futures. Let me show you. These are the Dow Jones futures. Okay, this is a chart of E-mini Dow Jones, okay, futures. Now, what's wrong with the Dow Jones futures? And how the Dow Jones futures are going to impact the entire US stock market, the SP 500, the Dow Jones, Nasdaq, and their respective ETFs like QQQ, SPY, or DIA, etc. Now, if you notice that in the month of or at this particular junction, okay, April, okay, in the beginning of April, there was a crossover in the moving averages, and that crossover actually brought the bullishness in the Dow Jones futures, and then the same bullishness was seen in the entire US stock market, and also in the S&P 500 naturally, and in the Dow Jones and in the Nasdaq. Now, if you see this time, particularly on Friday, we have seen a bearish crossover in the EMA, in the exponential moving averages, and this has happened almost after 1.5 months, okay, 40-45 days, right? And this is very, very significant because the Dow futures, the Dow Jones futures, are an early indicators of what is going to happen in the entire US stock market. That is why this is very, very important, right? And in my pre-market update yesterday, okay, on Friday, I've clearly mentioned, means even before the open of the US stock market, okay, I knew that this is happening. That is why I mentioned this thing, that there is something strange happening in the US stock market, and it cannot be seen without analysis. And I have decoded the same in this pre-market update for you, and means for my community members, and you can plan accordingly. And you can clearly see that one thing was the consolidation, and the other thing was the Dow futures are at a crucial point wherein the moving averages are about to give a bearish crossover as early as today, means yesterday itself. And when that happens, then the Dow futures will go bearish, 80% plus bearish, and this means it will impact the indices, all of the indices, S&P 500, Dow Jones, Nasdaq, and then the entire US stock market. And this means that when the Dow futures goes bearish, then the bullishness or bullish hold we are seeing in the US stock market or in the S&P 500 will no longer be able to sustain, and then the US stock market and the S&P 500 and the Dow Jones will be heavily susceptible for a fall. So there is a connection in all of the indices. If something happens in one index or its futures, then that gives the impact to all other indices and then the entire US stock market, right? This was the Dow futures. So second thing was the Dow futures. Number 3, there comes a Dow Jones itself. Dow Jones is generally considered as the face of the economy, the face of the US economy, and a barometer, okay, of the US economy, or you can say like for the global economy. Okay. Now, if you notice that now the Dow Jones is on or is about to give a bearish crossover the moving averages, right? First, it was the Dow Jones futures, okay, that is confirmed bearish crossover. This means highly likely the Dow Jones is also going to give a bearish crossover maybe in 1 to 2 days. Okay, it is expected to give the bearish crossover. If for some reason, if there comes heavy bullish movement for any reason, known or unknown, and that bullish reason or that bullish movement comes heavily for 1 to 2 days, then only the crossover can be avoided, and then it will form a slip, and the slip will support a bullish movement. Okay, If this happens, then, and if you are my community member, then accordingly, okay, I will inform you. But otherwise, technically, okay, without the heavy bullish movement, there are no chances, or like 0% chances, that there will not be the bearish crossover. It will be there. Okay. When that happens, then the entire US stock market is susceptible for a fall, and the S&P 500, Nasdaq, and everything will follow. Okay. So the third thing was the Dow Jones itself, right? Next week there is nothing special, but yes, on 25th, on May 25th, the FOMC minutes of the meetings will be published. Okay, and the notes will be there, and then only we will come to know what okay, because recently the Feds have raised the interest rates, and through that, the FOMC minutes of the meeting, we will come to know whether the Feds have any plans to pause the rate hikes, or if still the Feds are thinking, okay, that the inflation is not going to come down, and they have to take some strict these measures, okay, accordingly. So for now, these are the things that you must consider and that you must remember, right? Now let's talk about the probable movement of the S&P 500 in the coming week. So guys, once again, I have published the trade setups screenshot and the trade setups data that I give to my members who have participated in this the program, the 30% returns in a year. However, generally we are able to cover 30% returns in 4 to 6 months on an average. So if you also want to participate in this program, and so there are the 4 tiers, okay, these are the terms and conditions, and you can send me an email. This is my email address. Now the probable movement says, first of all, when you look into these particular candles, then it looks like that the S&P 500 is trying to consolidate. So what is this, the consolidation? Consolidation is the phase wherein a stock or an index or the stock market, it neither moves up nor gives up. Even though the technicals will be supporting a bullish movement, it will not move up. And the technicals will be supporting a bearish movement, it will not fall. Rather, it will simply move up and then down and up and down. That is the consolidation. In the consolidation phase, and here we are talking about the S&P 500. So we can simply see that the S&P 500 moved up, failed, came down, moved up, came down, again retraced, moved up, then down. So what happens in the consolidation, that there are these the two levels or zones, basically zones. Okay. Now the particular this particularly stock, okay, or an index, it simply oscillates between these the zones, okay, or these the levels. Zones basically oscillates up down, okay, and this happens, and then one day all of a sudden there comes a breakout, either this side or that's okay, or this side, either it will go bullish or it will go bearish, means then it will gain or it will get its the direction, okay, and whichever side the breakout comes, the S&P 500, in this particular case the S&P 500 will follow that particular direction, and it will give approximately 5%, okay, for minimum like 4 to 5%, 3 to 5% movement in that particular direction. But the problem is that no one knows when actually the breakout will happen, when actually the breakout will come into the picture. Generally the breakout, okay, it comes whenever there comes a big event as in the next FOMC meeting, and when the Feds will decide whether to raise the interest rates or not. If the Feds raise the interest rates, so let's say that the S&P 500 is consolidating, okay. Now when the Feds they raise the interest rates, this means that the breakout will come into this side, the bear side, a heavy fall, okay, like 10% fall within a week, normal, okay, and that will again like 10% fall from these levels, like 3,600 or 3,600 approximately, okay. Now if the Feds, if they decide that okay, that they are not going to raise the interest rates, in that case a bullish breakout and then 4,227, that will definitely be in the picture, right? So this is what the consolidation is, and this is what happens, and this is how it is going to work. But the pattern of the consolidation is very much visible on the 4-hourly chart of the S&P 500. Very much clearly visible on the 4-hourly chart of the S&P 500 that the S&P 500 is consolidating, right? Now, if the S&P 500 is truly consolidating, in that case, what is going to happen? In that case, on Monday itself and on Tuesday, Monday and Tuesday, you will not see any movement that will be beyond 4155. Secondly, you will not see any movement that is below, at first, that is below a movement in between 4099 and 4150. So 4099 and 4150 or 4155, okay, or in actual it will be 4088 at max. So 4099, 4088, okay. So if on Monday and Tuesday also, if the S&P 500 remains like this, in that case it will further confirm that yes, the S&P 500 is consolidating. Simple, that the S&P 500 is consolidating, and now only a breakout will bring the S&P 500 back into the movement, either this way or this way, okay. And until and unless the S&P 500 is consolidating, it will simply keep on oscillating up down up down up down between these levels, 415055 and 4088 or 4099, okay. Only in this, only okay, this will be the range and these will be the zones, basically not the levels but the zones, right? Now the another thing, okay, here is that as of now, because of the 2 consecutive rejections on the weekly chart, okay, we have seen that must bring bearishness on Monday itself, okay. When I say bearishness on Monday itself, means either there must come a gap down open, or even if there comes, any kind of upward movement, then also it should come down, okay, that kind of bearishness. See guys, when I say bearishness does not mean that every day you will see back to back red and red candles. Every day it will fall and fall. No, bearishness means that now the S&P 500 and the US stock market will align itself in the bearish direction, and most of the times 70 to 80% of the times, okay, you will see red candles, and only a few occasions, okay, you will see these the green candles, okay. That is the bearishness. Similarly, bullishness means most of the time you will see green candles, and a few times you will see a red candles, okay. Anyways, on Monday, okay, this is the picture. But again, on Monday, if the S&P 500 for any known or unknown reason is able to breach the much anticipated mark, that is 4155, and sustains above the 4155, then only it is permitted to move towards 4195. Then because the 4195 was the previous high, this means that the S&P 500 is going to find very heavy resistance at 4195, and once it breaches and sustains above 4195, 4196, then only it will move towards 4227, okay. Now remember one thing, that on the weekly chart and on the daily chart, through the analysis, technical analysis, we have seen that the S&P 500 is in 50-50 situation. It can either go bullish or it can go bearish, right? So this, okay, this is the 4155. However, the current movement and the bearishness is not supporting any upward movement towards 4155 or anything beyond 4155, or a sustained movement above 4155. But if that happens, chances are very low, very very nominal, very low, okay, that it can means that this can happen, okay. Now in this, the bear side, if there if there comes a fall, okay, because there's a bearishness, okay, in the entire US stock market and in this the S&P 500. So when there comes a fall, and if the fall is limited to 4099 or at most to 4088, and then there comes a reversal, okay. So yesterday on Friday I mentioned this thing, that S&P 500 can now come to like 4099, but if it clears, if it goes below 4099, then there can be like then there come okay a very heavy fall. But if it sustains above 40999, then it can give a reversal, and it did. It gave a reversal from 4099 itself. Okay, anyways, now so if there comes a fall, but the fall is limited to 4099 or 4088, then most likely on Monday itself, okay, there will be a further confirmation that it is consolidating. Now, one more thing about the consolidation is that whenever a particular stock or an index or the stock market is in consolidation, it does not respect the technical indicators. Technical indicators will say bullish, it will not go bullish. Technical indicators will say bearish, it will not go bearish. Rather, it will simply keep on oscillating. Okay. So on Monday and Tuesday, okay, it will be very much clear and very much confirmed, okay, whether it is consolidating or not. If it is consolidating, then we have these consolidation strategies, okay, that you can use. Okay, and if it is not consolidating, then whatever the movement will be there, if there comes a bullish movement, make sure that you are collecting shorts and puts for the longer term, at least 1 year, so that when there comes a very heavy fall, then along with the market manipulators, you can also make a lot of money, tons of money. Okay, and once again, remember, recession is the best time to make a lot of money, okay. Now, okay, this is the thing. Now in the bearish side, okay, because we are anticipating, okay, or we have seen, okay, this is the bearishness. If the S&P 500 clears the 4088, in that case, what will happen? It will come down to 4065, okay, and then it can come down further to 4035. In that case, the consolidation part, it will fail. Okay, it might not happen, right? So it will come down to 4035, find very good support, and then a reversal from 4035 itself. But at first, it will try to find a reversal from 4056 or from 4045 itself. Okay, but again, that is the upper boundary of the zone of 4035. Okay, so if there comes a normal fall, in that case, definitely it will see a reversal. A reversal up to what? A reversal up to a maximum of 4099. Okay, 4099 or approximately 4099, a reversal, and then again a fall. Okay, this is how it will work. Okay, so now if there comes a reversal, if there comes a downward movement on Wednesday or on Thursday, then the Ichimoku cloud will also come into the picture. Now it will become extremely heavy support. The zone of 4035 will become extremely heavy support. Any fall will then be limited to the zone of 4035. That's it. Okay, breach can happen, not a problem, but again, most likely it will be able to sustain. If there comes one single candle, there comes very heavy breach, then either the next day or next to next day, there will be a reversal. Okay, this is how it is going to work. This is the bearish side. Okay, and if there comes like very heavy bearish movement, okay, very heavy bearish movement because of these the two consecutive failure on the weekly chart of the S&P 500, if there comes very heavy bearish movement, in that case, what we will do, we will first wait for the closing of the S&P 500 below 4000. Once that happens, then the second closing, two consecutive closings below the 4000, and then another, okay, this is the further resumption of the bearish trend or further fall, right? Yes, there might be a trap, a bearish trap in this particular situation. Okay, what kind of trap? That it comes down, it fulfills its obligation, okay, that I mentioned, okay, as per my theory, okay, it comes down and hits 3972, and then it on one day, okay, it closes below this the 4000, but the other day it closes above the 4000. In that case, this will simply fail, or this will simply negate this the bearish, okay, this is the bearish movement, okay, this side. And in that case, what will happen, that we can anticipate, okay, a bullish movement. So once again, guys, wait for Monday. Okay, Monday is most likely it is going to confirm, and then the Tuesday. Okay, so Monday, Tuesday will confirm whether it is a true consolidation, provided that the movement remain, okay, here 4155, 4088 or 4099, that the movement of the S&P 500 remains in between, okay, these the zones. That's it for Monday and Tuesday. Then yes, okay, this will be the picture that yes, most likely it is consolidating. So guys, if you have any questions that you want to ask, okay, related to this or anything else, then please feel free to comment and I will answer to your questions. And guys, hit like if you have liked this video, and if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And other than that, if you are looking for the daily analysis, the daily updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, this was my S&P 500 technical analysis for the week of May 15th, 2023. That is from May 15th, which is Monday, through May 19th, that is Friday.